Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Tuesday, January 13th. Firstly, good to gold futures, and here we see continuation of the trend to the upside today, following two very solid white body candles with the buyers in control following the breakout from the 1218 level of resistance. The market today testing through the important resistance level at 1237.9 and being rejected from there, with the sellers taking control of this market. Weak control, but they have taken control. And this is something of a spinning top type candle. It's a small black body candle, so it means that momentum has shifted away from the buyers who had very strong upside momentum in net terms to the sellers in a minor way, and does suggest that there is potential for a change of trend back to the downside. Now we also have a potential bearish harami pattern, and that's where we have this uptrend in place, the white body candles here, the uptrend in the first time frame still in place, but the body of the current candle is within the body of the previous candle. And we can see that that's just the case here, and it does suggest a possibility of a change of trend. So we always require confirmation. We'll be looking for the market to make a lower high and a lower low. Now if it does make that lower high and lower low, we're likely to find some strong support at the 1218 level, whereas it was previous resistance. It may now turn into support. And we can see here previously in a minor way that it acted as support for a couple of candles and then was breached. So that may be a very important area, as may this previous area at 1237.9. So even though we have the short-term dynamics moving away from the buyers and favouring the sellers to a slight degree, and some indecision in the market, a shift in momentum quite weakly to the sellers, there still is a possibility that the trend could continue to the upside. Now in terms of Ichimoku, we do have a bullish market in all three time frames, and we have the market trading above the cloud, the Kijun-sen and the Tenkan-sen, and that bullishness at the moment is supported by the Chikou span. So it does suggest that there is a very real possibility of this market continuing the trend to the upside. Now just have a look at the Fibonacci retracement technique here, and here we have just a one candle downtrend in place following that very strong breakout after the above the Ichimoku cloud, and here we see the market interacting for the second day to and just above the 161.8% level, being rejected from there, and with the sellers losing control and the market failing to close above that level, it does suggest that there is a possibility of a change of trend in the first time frame. So we'll be looking for confirmation of that, with the market to make a lower high and a lower low. And just using the Fibonacci extension tool or the Fibonacci projection tool, and we're examining the relationship of the current first time frame uptrend that the market's in to the previous time the market was trending up. And here we see the market testing above the 50% level, testing through the 61.8% level and being rejected from that region, and that also suggests the possibility of a change of trend. Next, moving to the bands here with gold futures, and here we see continued bullish activity up above the upper band in terms of the trend in the first time frame still being up. We haven't had that change of trend yet, even though we do have a change in terms of the short-term dynamics with the shift away from the buyers to the sellers in a minor way. But with the market maintaining price action up above the upper band, it does suggest that we still have a fairly strong bullish bias in this market. Now one of the tests that I mentioned yesterday would have been the previous swing high here around the 1239, 1240 level, and we did see the market trade up above there, but we failed to close up above there. And what I'd like to see is the market close up above there in a fairly strong bullish manner, and if we see that, it certainly could see the market continue to appreciate higher. Moving next to NYMEX oil, and here we see continued price activity down below each of the Ichimoku indicators, suggesting that we have a very strong negative market in all three timeframes, trending down very strongly. For today's candle, continuing the trend to the downside with a lower high and a lower low, but we now have the introduction of a white body candle, and it suggests that the downside momentum that the market had previously is no longer there, and we've seen the buyers attempt to build some upside momentum. Now they haven't been very strong in doing so. It is only a fairly small white body, but we have seen the sellers lose control of the market, with this candle able to close up between the high and the midpoint level, suggesting that control has shifted for today's trading away from the sellers back to the buyers, and it suggests that there is potential for a change of trend to the upside. Now, as we saw today, however, we see the 46.72 level holding as resistance, whereas it was support in the recent past, and that will be an important level if we are going to see a change of trend to the upside. But I suggest that even if we do see that break of 46.72, we're likely to find very strong resistance around the 49.90 area, with the Tenkan Sen trading very close to that region. And we know that the Tenkan Sen tends to be a very strong area of resistance when we have very strong downside momentum in a market. So even though we may see the buyers come into the market, it may only be temporary. Now, the important thing to watch here is that 44.78 is important support. We don't have any major support between there and 32.64. So if we see the market breach that level in a very strong bearish manner, we could quickly see NYMEX oil trading down to 32.64. But at the moment, the short-term dynamics aren't favouring the sellers. It is looking as though the buyers, if they're strong enough, they can change the trend to the upside and at least test to the 49.90 area if they can breach 46.72. Now, just looking at our bands here, and here we see continued activity down below the lower band, and it does suggest that we still have a very strong negative bias in this market, and any rally that we see may find very strong resistance at the lower band at 48.26. Next on to wheat futures, and here we see continued selling in this market, and the wheat futures tend to be very dynamic markets, and very strong and well-defined second time frame and first time frame uptrends, and this downtrend that we're in at the moment is no different. Here we see a very well-defined series of lower peaks and lower troughs, and the market continuing that trend with the trading down below the 557.50 level of potential resistance for yesterday, with the market being rejected from there. We have seen the sellers close with control once again, as we've seen for the past 5 consecutive trading days. So it does suggest that the sellers are very strong in this market, and the market did attempt to rally through 557.50 but found resistance around the top of the Ichimoku cloud. So that is a very important area of resistance around this level, and we saw the market find resistance there for the previous day's trading. If we do see the trend continue down, we should be watching the bottom of the cloud, 539, very closely. We're likely to see some support coming in around that area, and that would coincide roughly with this area of the previous swing low that found support at the Kijun-sen previously. Now, we do have a bearish market in the medium and fast term timeframes here, with the market trading a fair way down below the Kijun-sen. It does suggest that we're starting to look a little overextended, and considering that we've had this series of 5 black body candles, sellers in control strongly for each of these candles, it wouldn't surprise to see the buyers come back into the market either today or when they test down around, or tomorrow, I mean, if they do test down around the bottom of the Ichimoku cloud. Moving next to corn futures, and very important trading day today with the sellers taking control on a very large black body candle, and one of the largest black body candles that we've seen in this market for quite some time, and it does suggest that the sellers are very strong in forcing this second time frame trend to the downside. Here we have a series of lower peaks and lower troughs well established now, with the market closing down below that previous trough. The sellers have found very solid downside momentum. They've taken very strong control by closing down towards the low, and they're very strongly committed to taking this market lower. We did see the market testing once again to the 406.25 level of previous resistance. Being rejected from there strongly does suggest that there is a very great likelihood of this market trading lower. We will need to breach the 385 support, where we tested to today and were unable to close beyond. But I suggest that if we can test down below there, we may find some support either at the top of the cloud, roughly about the 380, 381 level, 382, or just down within the top of the cloud there. And that would correspond with some minor support down around this previous level, 377, and a previous swing high around 381. But we do now have a bearish market in the medium and fast term timeframes by trading below the Kijun-sen and the Tenkan-sen. And if we look closely here at the Chica span, that's now within the corresponding price action. So we've had a change in momentum where we don't have that strong upside momentum that we had previously, and it does suggest that there is potential now for corn to follow wheat and change that trend in the second term time frame quite significantly. And just looking at corn futures with the bands here, and here we've seen the strong breakout following the squeeze going on. So that's what we look for as traders. We want the squeeze, and it alerts us as a setup for a potential trending move. We require the either bullish or bearish breakout. We've seen a bearish breakout before, but we want to see the strong bearish follow through. We didn't see that previously. We saw the market rally to find resistance around the middle of the bands, and now selling off very strongly. And it does suggest that we now have corn futures transitioning from this very strong uptrending phase into a new strong downtrending phase. So what we want to see here is some strong follow through to the downside. So a bearish close and continued strong downside momentum. Some doubt whether we will see the market do it today, though. This is an extreme candle, and we don't tend to see strong follow through after these extreme candles. We tend to see the market take a rest, so it will be interesting trading coming up. Now, if we see the market rally, potential support at the lower band, around the 397 level. So potentially strong resistance around that area. Now just taking a quick look at copper futures, and here we see very strong bearish activity down below each of the Ichimoku indicators. If we look back here, we had the market trading down below the cloud, strongly establishing the downtrend that we saw in place, and for today's trading a very, very large black body candle. Sellers in control, strongly committed, but looking overdone in the depth away from the cloud and from the Kijun Sen and the Tenkan Sen. If we look back here at the last time we had this type of candle, we saw the market rally to the Kijun Sen and then sell off. So that's what we'll be looking for here today, the potential for the market to rally, and I suggest that we'll probably find resistance at the Tenkan Sen first around 271. All of this negative price activity is supported by the Chica span quite strongly, but that's looking overextended in the depth away from the price action. So no guarantees that we will see a retracement, but there is a good possibility with the market forming an extreme candle today. Next to the US 30-year bonds, and here we see continued price activity in terms of the uptrend in the first time frame, the market making a higher high and a higher low. But we've done that on a very indecisive candle, almost a doji type candle. The market opening around the middle of the range, closing around the middle of the range, meaning that in net terms throughout the trading day there's been very little progress between the open and the close, and that suggests indecision. And with the large shadow on the top and on the bottom, it suggests that the buyers have lost commitment and the sellers have lost commitment, with the net result at the middle of or at the end of the trading session with neither side taking control. So considering that the market is in a first time frame uptrend, it suggests a possibility of a change of trend to the downside. So we'll be looking for a lower high and a lower low. Now if we do see that occur, potential support at the 147 level, the previous level, and then 146.12, but importantly in between there we have the Tenkan Sen trading around the 146.20 area, 146.19, so we should see strong support coming in there. The market has found resistance at 148.23, so that is an area that will be important if we do see the buyers attempt to come back into the market as well. But a bullish market in all three timeframes. Any retracement that we're likely to get here will probably find support at one of these levels already mentioned, and then we may see the buyers come back in, and a lot depends on whether the buyers are eventually going to be strong enough to breach the 148.23 level of resistance.